Top 10 Diwali stock picks. Let's take a look. In today's special Diwali stock picks, we are diving into a few promising stocks by India's top brokerages that could add some sparkle to your investments this festive season. Let's get started and light the way to a prosperous year ahead. Number 1, Bajaj Auto. Sector Auto, CMP 10,501 rupees. Target price 12,483 rupees. Upside potential 18.9%. Brokerage Choice Broking. Brokerage View. Bajaj Auto is the world's largest manufacturer of three-wheelers and one of India's leading auto manufacturers. The brokerage is positive for medium to long term due to its focus on exports to drive sales, high demand for Freedom two-wheeler, Chetak EV, rise in premium products, solid growth in EV portfolio and profitability. Number 2, Bharat Dynamics. Sector Defense and Aerospace. CMP 1114 rupees. Target price 1501 rupees. Upside potential 34.7%. BDL is a government-owned defense company with a focus on missile and defense systems. The brokerage is positive as it caters to MOD needs and has rising export opportunities, huge order inflow from FY25 to 26, 60 to 70 billion rupees worth Astra weapon contract in the pipeline. Number 3, Tata Motors. Sector Auto, CMP 907 rupees, target price 1225 rupees. Stop loss 770 rupees. Upside potential 35.06%. Brokerage Prabhudas Leeladhar. One of the biggest auto brands in India, Tata Motors stock has witnessed decent erosion in the last 1 month. As per Prabhudas Leeladhar, RSI is near oversold zone. With risk reward favorable and the chart looking attractive, a further side could be seen. Number 4, KPIT Tech. Sector IT, CMP 1785 rupees, target price 2500 rupees, stop loss 1500 rupees, upside potential 40%. Brokerage Prabhudas Leeladhar. The stock has been in a strong uptrend for a long time. With recent consolidation, it has been moving in a positive bias. A decisive breach above 1900 levels could indicate a breakout for an upward move. Technically, the chart looks good and RSI showing strength right now. Number 5, Allied Blenders and Distillers. Industry, Consumer Goods, Liquor. CMP 332 rupees, brokerage Sharekhan. Allied Blenders and Distillers or ABDL is one of the largest Indian-owned, Indian-made foreign liquor, that is IMFL, companies in India in terms of sales volumes between FY24 and FY 2022. The company has repaid approximately 800 crore rupees of debt using IPO proceeds. Currently, it holds 325 crore rupees in working capital debt at a lower interest rate of 8.5% compared to the previous 10 to 10.5%, leading to an expected 50% reduction in interest cost year-on-year by FY 2025. Earnings are expected to grow significantly due by reduced debt and premiumization. Number 6, HUDCO. Sector NBFC, CMP 215 rupees, upside potential 64%. Brokerage Sharekhan. HUDCO is likely to deliver a healthy book value CAGR of 17% driven by strong earnings growth led by 31% loan book CAGR over FY 2024-27 with a potential upside of 64% from the current market price. There is a strong growth visibility for the next 5 years for this one. The RBI recently granted HUDCO the status of a NBFC, which will enable it to finance a wider range of infrastructure projects in addition to housing such as renewable energy, smart cities and green infrastructure. Most of HUDCO's exposure is government guaranteed, thus the risk is minimal. Strong growth tailwinds, lower competition, NIM improvement in lower interest rate regime, robust capital position are also some factors for positive outlook on stock. Number 7. Jupiter Wagons. Sector Railway. CMP 461 rupees. Stop loss 390 rupees. Target price 1 700. Target price 2 760 rupees. Upside potential 49%. Brokerage Anand Rathi Investment Services. Since many months, most of the railway-related stocks have been trading in a corrective mode. Jupiter Wagon has eroded around 40% of its price from the top of 746 rupees. At this juncture, the stock is turning from its 200 DMA. There is a breakout from the falling trend line on the daily chart, and the stock is very much near to its previous demand zone. Investors or traders can accumulate the stock within a time frame of around 1 year. Number 8. Hindustan Zinc. Sector Zinc. CMP 506 rupees. Stop loss 380 rupees. Target price 1 680 rupees. Target price 2 750 rupees. Upside potential 50%. Brokerage Anand Rathi. Since many months, Hindustan Zinc has been trading in a downtrend after making a peak around 780 mark. The stock then found support at the placement of its 200 DEMA near 470 level and has been consolidating there since many weeks. Anand Rathi can see multiple supports near 470 mark. The stock is on the verge of a fresh breakout which would resume the uptrend. Investors or traders can accumulate the stock within a time frame of around 1 year. Number 9. Bank of India. Sector Public Sector Banks. CMP 105 rupees. Buy range 96 to 106 rupees. Target price 132 rupees. Time horizon till next Diwali. Upside potential 25%. Brokerage HDFC Securities. Bank of India or BOI is the 6th largest Indian public sector bank. It has demonstrated robust business performance in Q1 FY25, achieving a 12% YOY increase in total business. The bank has recorded lower credit costs and an improved slippage ratio, reflecting prudent risk management. Its management is focusing on RAM, that is retail, agriculture and MSME lending, in its endeavor to enhance yield with a target of 55% of the portfolio allocated to RAM. This segment of the loan book showed impressive growth of 18.8% YOY in Q1 FY25, with retail advances up 20% YOY, agriculture loans increasing by 22.2% and MSME advances growing by 16.1%. The bank has guided for credit growth of 13% to approximately 14% and deposit growth at 11% to 12% for FY25. This is consistent with the strong performance observed in Q1 FY25. The last stock is Jyoti Labs. Sector FMCG. CMP 528 rupees. Buy range 480 to 533. Target price 600 rupees. Time horizon till next Diwali. Upside potential around 13%. Jyoti Labs Limited, one of the leading Indian FMCG companies, was founded in 1983 with a single brand, Ujala. Today, the company has leading brands like Ujala, Maxo, Exo, Henko, Prill, Margo, Mr. White, etc. The fabric care business has been growing at a 13.8% CAGR between FY20 to 24, 13% in FY24, which is much ahead of the industry standards. Ujala Supreme continues to dominate the fabric whitener segment with an 83% market share in FY24. Personal care grew 21.1% year-on-year in FY24. Well, that is all for today. Stay tuned to ET Markets for more.